Direct or regular? For long term or direct? When you know exactly which fund you have to invest for longer period of time, then invest in direct. For short term, you need guidance, especially when to exit the fund. So even the exit strategy is also very important. For that, you can try regular investment. What about risk tolerance? So every mutual fund will give you a riskometer. It will tell you exactly how risky that particular mutual fund is. So even going to that, first I need to understand how much is my risk taking capacity. So know your risk taking capacity. Based on that, you make your investment. Asset allocation. So it's very important for me to do my asset allocation, or else let me give an example. So if I invest 5 funds and all are in large cap, then 75% of my overall investment are in the same funds. SIP or lump sum. So timing the market basically, right? So if you see historical charts, if a person has done an SIP on a daily, monthly or fortnight or irregular, right? So it gives you almost the same returns. So there's nothing called timing the market. So whenever you have money, please invest. So if you have money in lump sum, then invest lump sum. And if you don't have money, then you have to do the SIP. Wherever monthly you assign an amount and automatically that gets invested. What about active mutual funds and index funds? Index funds are for long-term investment for something like more than 5 years. Active mutual funds, if you're choosing higher returns than benchmark is Nifty or sensex, it gives you around 12 to 16%. If you're chasing beyond this, then active funds. Thank you.